Welcome, everybody. My name is Herbert, and this is CyberBulls. Today, we have a very special guest. His name is Warren Redlich. He is an Uber Tesla bull. We're going to find out more about his philosophy and his thinking about what's happening coming up. In the meantime, let's go. Tesla is the most consequential company in the world.
I'm the bull on the EV business. I think the margins are going to explode.
Still the same company. Company is still executing.
The energy is bigger than the auto business.
I'm the young bull that talks a lot of smack.
All right. So we have a full group here, and this is all the bulls. Let me introduce you to them. So Christian, he's a momentum investor. He likes to keep some money on the side, as he calls it, dry powder. He will invest when he sees the stock fall, like he did when it did. Tesla fell to 100, and then he'll buy when it's low and he'll sell when it's high. Jeff Lutz, we call him the rational bull. He has all sorts of different techniques. He'll play whichever he needs to, whether it's options, momentum, long term. I'm a forever bull. I call myself that because I like to find one company that I really like. I go all in and then I hold for as long as I can. And we are here to introduce you to Warren Redlich. We call him the Uber bull because I'm a long-term bull, forever bull, but he's even more forever than me. So we want to find out from you, Warren. Tell me about your philosophy for those people who don't know. But actually, what I'm really interested about you was that many years ago, you started to think and talk about Tesla as battery capacity, and you kind of always presented it as in that manner. Start with that and tell me more about that.
Sure. I call it the battery revenue model. Can you hear me okay?
Yes.
So I call it the battery revenue model. The battery revenue model starts with the simple premise that Tesla, the vast majority of Tesla's product contain batteries in them, and you can value Tesla's revenue based on the number of kilowatt hours and the dollars per kilowatt hour. So a really simple example would be, let's say, if you imagined a hypothetical $30,000 Tesla Model 3 that has a 60 kilowatt hour battery pack, that would be $500 a kilowatt hour. And then you can price that in all of Tesla's products. Now, I did the numbers. I think James, I forget who, one of the other YouTubers did something similar. Maybe it was Limiting Factor. And I figured that Tesla used about 100 gigawatt hours of batteries in 2022. And their revenue was $82 billion. So it works out to about $800 a kilowatt hour in revenue. So if you go forward to 2030 with Tesla's projection that they will deliver products containing 3 terawatt hours of batteries in 2030. Products contain, keep in mind, solar doesn't contain batteries. And if you get into bot, the numbers are different. There's all kinds of ways you can play with this. But if they deliver products containing 3 terawatt hours of batteries, and then you apply some dollars per kilowatt hour number to that, let's say $500 a kilowatt hour. Let's say it drops from the current $800 a kilowatt hour down to $500 a kilowatt hour. Then you're still talking about $1.5 trillion in revenue compared to $80 billion in revenue this 2022. So that's basically a 20x, right? And then you can say, well, wait a minute, it's going to be less dollars per kilowatt hour. Well, okay, but 500 is less than $800 a kilowatt hour. You can also say it's going to be more than $800 a kilowatt hour if you think about once you add FSD. If FSD takes off, if the value goes up and the take rate goes up, then the dollars per kilowatt hour goes up because people are now paying an extra $20,000 a car. That's one example. If it's $20,000, maybe it's $50,000. Tesla Bot has a 2.3 kilowatt hour pack. And my best guess is it's going to sell for, let's say, $20,000. Even at $20,000 on a 2 kilowatt hour pack, that's $10,000 a kilowatt hour, right? So that's a lot more than $800 a kilowatt hour. So when you look to Tesla's future and you value it based on dollars per kilowatt hour, and you say how many kilowatt hours of batteries or gigawatt hours of batteries they're going to use, you get to really, really large valuations really quickly. So that's one of my theories of how to value Tesla. It comes out to a really big number. You can also look at Robotaxi and say Tesla has a fleet of 10 million vehicles making $50,000 a year in gross profit, which is a ballpark number, and I can break that down further, but that's $500 billion a year in gross profit, right? Tesla's revenue in 2022 was 80 billion, right? The profit was something like, I don't know, 10 or 20 billion. It was less than 20 billion. It's probably gross profit was the operating profit somewhere. It was somewhere around 10 billion, let's say. So that's a 50x in profit and gross profit. So you see where I'm going. It's a 40, 50x in gross profit. And that's with Robotaxi with nothing else. They don't sell a single energy product. They don't sell a single car. They just run a fleet of 10 million Robotaxis and you get those numbers. What if you go to 100 million Robotaxis and you cut them from $50,000 gross profit to $20,000 gross profit? Well, you've 10x divided by 2.5. You end up with, just the numbers just start getting so crazy. It's hard to, it's like a $2 trillion gross profit at that point. So, and
Nice.
Again, compare that to where Tesla is today. And we're talking about 7 years from now that we could see a 20x, a 50x. And that's why that's why I'm called the hyperbull.
Yep. But the 7 years is not terribly crazy, but love your introduction. Thank you for that. Let me do a quick segment, which I'm calling all of us are going to get in a bull ring for 1 minute, right? It's a round table. So I'm going to ask each of you to answer this, but keep your answers to just 1 minute, just so we can get around and then we can have a discussion on it. Okay. So do you believe that with Master Plan Part 3 going to be announced at March 1st, Investors Day, and Elon saying that this is going to be fully sustainable energy for Earth, and then him clarifying just yesterday that this is not just for investors, this is for the people and life on Earth. Do you think that this is going to re-rate Tesla as more, not just a car company, but as an energy company? Is this something going to be big? Let's start with you, Christian. Give me your 1 minute quick answer to that.
Yeah. So I think, thanks for joining, Warren. I think in general, basically, Investor Day, normally the way you think about it is, okay, it's probably going to be a great event for us. We're going to learn a lot. We get to see Elon talk. It's a big, exciting event. But normally, conventional wisdom is it doesn't do much for the stock price. This time could be different, though. We see the stock rallying into this. But what I would say is, unless Tesla shows an actual, concrete something to move the needle, I don't think we're going to rally after we've rallied tremendously. Now, I could be 100% wrong, but I think it's going to take more than we're going to do this in 3 years and this is coming and we're going to announce a gigafactory and, it's going to take 2 years. It has to be, I think, something that you can kind of value a little bit if you're going to, I think your question was if you're going to see, a re-rating of the stock, which means go higher. I guess you're assuming there, Herbert. So I'm not really worried about it, but if that specific question to me would be, there needs to be something during the talk that you could actually finance out, use financials to actually say, okay, they said this. I'm pretty sure what they're saying will happen and it'll happen within the next 12 months or 18 months. And then maybe I can go out and I want to buy the stock because I wasn't aware of that information. Short of that, I don't think there'll be much in way of stock price action.
Okay. Jeff.
Hey, everyone. Hey, Warren, Herbert, and Christian. Great to see all of you. I'll just say that this analyst community doesn't seem as responsive without Tesla actually supplying a forecast and actually almost spoon feeding out, like, this is what we're going to do, and actually tie it to product, a product schedule that is shipping or about to ship. And so they actually have to tie it to product and then tie it to, I think, a forward-looking projection from the company. And even the projections, sometimes the analysts don't respond to. But I think Tesla needs to do those two things for a re-rating to occur. I would even go as far to say that this analyst community wouldn't re-rate until they actually start seeing the revenue coming in from what Tesla is talking about. So, and especially in this market, this isn't a market now of expanding multiples at this point. Everything's kind of a show me. This is kind of a show me market at this point. So let's see. We've actually had this rally to start the year, but I would say that Tesla really has to show the product, tie it to product dates, show the forward-looking statement, issue it. And I would say these analysts would actually go as far as saying, like, let's see some product actually shipping.
Okay. I have a slightly different answer to this question, in that I do think this is going to be a big deal. Normally, I'm the first, and I've made many side bets in previous shows where I always say that I don't think the stock's going to rise after a product demo or an investor day. And I have that bet with Alexandra right now, that I said that on March 2nd, the end of March 2nd, it's going to not be a green day. And we have that bet ongoing right now. However, I think this time is different. I don't think the stock will rise immediately, but it will be important. It's going to be changing the narrative. It's going to start showing that Tesla is not, they're going to basically say that the car business is on track. We're going to have all segments, right? Here's our Gen 3 platform, a lower price Model 3. We're seeing sales skyrocketing despite a potentially recessionary environment. We might even show a van or potential for future van and potential for robotaxi. So all segments are going to be taken care of. Our factories are running and well. We got enough batteries. Then they're going to change the conversation to energy, and they're going to share what happened to Megapack and Lathrop, and they're going to talk about the plants, and maybe they might reveal some deals and Megapack factories. So I agree with you. It's not going to change the analyst estimates right now, but it's going to start changing the narrative. And maybe in the second half of this year, maybe next year, once we see the actual numbers, that's when a re-rating will happen. So that's my quick answer. Yeah, Warren, what's your thoughts?
So first of all, historically, Wall Street does not get Tesla events like this, whether it's Battery Day, Autonomy Day, AI Day. They don't get it, and they're not going to.
But it's Investor Day.
They're going to talk about long term. Wall Street is interested in short term. Wall Street wants to know what's going to happen this quarter or next quarter. They don't care what's going to happen in 2030. Yeah. We could go in more depth into what you think is going to happen at Investor Day, but I think there's a larger issue, which is one of the things that we do, some of us do, and I try to avoid doing, is we end up saying, what's going to happen to the stock tomorrow? Or is the stock going to go up or down on March 2nd? And I will just say this simply. Anyone who could reliably predict short-term stock price movements, let's say you only got 55% right. And you knew you were going to be about 50%, 55% right. You were confident you were going to be at 55% right. You would be a trillionaire by the end of the year. Okay, so no one can predict short-term stock price movements. No one is better. You might get to 50.1%, okay, which is not enough to overcome the transactions costs. Okay, so just my opinion. And then you take the second step of people who say they can explain short-term stock price movements, like there's an overhang, let's say, or this happened or that happened, and that's what caused the stock to fall. No one can genuinely explain short-term stock price movements, because if they could actually explain short-term stock price movements, then they would be able to predict them. And then they would be a trillionaire by the end of the year. So no one really, and I'll be the first to say, I don't understand short-term stock price movements, right? I think here's what my prediction for the stock price over the next, let's say, month. It will fluctuate. I think that's a bold prediction. I'm confident in that prediction. I'm probably more than 55% accurate in that prediction, but it's not very good guidance for deciding when to buy or when to sell.
So I love what Warren's saying. I'll push back on Warren a little bit. I agree with him that you cannot predict short-term stock prices with any degree of accuracy. But I believe you can predict short-term stock prices if you have information. So if I know Elon Musk, and we know because, like, say Twitter, or when he sold stock because he needed to pay taxes and he took a poll. So I know, and the rest of the world knows, this man's about to unload stock. I could say, what are the chances this stock is going to go up or down over the next month if he unloads billions of dollars of stock? And I could say to myself, okay, I have a huge position in Tesla here. And Elon Musk is going to unload, I don't know, 10, 15, 20 billion onto the market. And I could just do a simple supply and demand saying, okay, there's going to be way more supply of Tesla shares than there is demand for them. Supply and demand, more supply, less demand, price goes down. Price goes down, stock goes down. So I can make it a bet, and I might be wrong, but that's okay. I might say, okay, I'm going to step to the side, and I'm going to try to maneuver some of this. I might get caught. The stock might run away from me. So be it. But I think, and I made this deal, and I've been right, when Elon sells, we have history, the stock goes down. When he sold for Twitter, the stock went down. So we don't need to guess. We know when Elon Musk sells stock significantly, the stock goes down. So that is something that we could say, hey, when that happens, I better do this if you want, and I could, maybe remove some downside. That's just my little tidbit on it.
I reject the hypothesis that Tesla stock fell because Elon sold stock. Rivian fell more. Arcimoto fell a lot more. Lucid Motors fell more. They fell around the same times that Tesla fell. Elon's sales of stock over something like 18 months amounted to less than 1% of the total volume of Tesla stock that was traded over that period. And again, if you were so confident of that when he started selling stock, then you should be a trillionaire now, right?
No, because
Okay.
in order to be a trillionaire, Warren, you need billions. Like if I'm just going to make up a number. If I have $100,000 and I'm great at short-term guessing, how am I going to get to $1 trillion within a month? I only have 100 grand. I could be being right, but I don't have the level of capital to get to $1 trillion. It's going to take me 1,000 million years. How am I going to get to $1 trillion if I got 100,000?
It wouldn't take you that long. You bet $10,000 every time within a month. You know, how many bets do you make a day? There's the question.
Yeah,
if
but
you're so
that's the
confident
thing.
in
You're
short-term
saying
stock prices, then
be
you
right
hang on.
52%, which is great, 53%. That means you're wrong 47%. So that means you're only right a fraction of the time. So it's still going to take a lot of time
But you're not
for
going
you to build.
You're not going with 53%. You're saying every time Elon sells stock, the stock goes down. So
Yes.
now you're talking 100%. You're saying
Yes,
100%
every time
if
Elon sells
announces
stock
he's
in the
selling.
short term, 100% goes down.
Well, then you would bet all 100,000 in
No,
some way.
but I'm not so confident in the bet that I'm going to put my life savings on it. But it
Well, then
doesn't
you're
mean
not
I'm wrong.
100%.
It doesn't mean. How about this, Warren? What if I had a huge position on, and I don't want to be a trillionaire, but I just don't want to lose a lot of money, and I step to the side and I say, you know what? I don't know that the stock's going to go up or down, but my guess is it's going to go down because you're about to sell a lot of stock. I might just go to cash and say, you know what? I'm not trying to be a trillionaire and I'm not trying to risk being wrong, but I'm pretty good with the hunch that it's going down. I might just step to the side. I might not make very much money. So I agree with you that I'm not saying you could turn it in and you're going to make everything right. What I'm saying is you can make some calculated bets in the short term to save yourself maybe massive amounts of money. That's my thing. And the only thing I'll say, and this is just a good conversation going back and forth, the comparison to Lucid, Rivian, all that, I've been knocking that down for months. Lucid is an unprofitable company. The only thing it has in common with Tesla, it happens to be EV. I don't give two shits about EV. Lucid is dying. Rivian is burning money. Tesla is a profit machine. Tesla has an energy business. Tesla is profitable per car. Tesla is a different animal. To compare it to these companies like Lucid and Rivian and NIO is a disservice to Tesla. And it's almost disrespecting them saying, yeah, Tesla's down 70% because Rivian's down 80%. So of course Tesla's down 70%. That logic to me is out the window because I look at Tesla as the preeminent company in the world. And I look at Lucid and Rivian as jokes.
It sounds to me like you disagree with Elon and the four guys on the All-In pod who believe that the Fed raising rates caused anybody who sells large complex machinery that's typically sold with debt cause those companies to lose value, and also that when you raise the rate, it makes it harder for startups to get investment because the investment thesis becomes, I can get 5% risk-free on government bonds. Why would I invest in this risky stock? And I don't claim to, let's just be clear, I'm not claiming I understand why stocks fall or rise. I'm claiming that you don't either.
No, but here's what I'll say, and then Herbert, you can move it. The 5% macro argument is a fine argument. I use that too. Fed's coming in, raising rates. So that's another short term. Odds are stocks are going down because the Fed's going to tighten and all stocks are going to go down, especially growth stocks. But the only problem with that argument is that Tesla, for most of 2022, held up pretty nice. The stock was doing actually very nice. It got a high of 300 something. It was outcompeting the Googles of the world by like double. It was doing better than Apple. I remember putting the charts out. It happened, and I think you have the exact better than me, Herbert, but it happened in around that October timeframe when it just ceiling. And that coincided with the Twitter deal, and it coincided with Elon selling stock, and it coincided with Elon going crazy on Twitter talking about politics. And if you want to ignore that and say, no, look at the stock now, went from 100 to 200, Elon could do whatever he wants, that's also wrong because Elon has calmed down quite nicely. Elon is much more calm right now on Twitter, and he has been for the last month. He still says what he wants to say, but he's much more refined in what he's talking about. So, again, I know you disagree, Warren, and I respect that, but that's the fact.
He just tweeted a meme of two sexy women, one of them feeding the other one milk with a bottle.
That has
You're
nothing to
saying
do
he's
with
calmed
politics.
down on Twitter.
That's not.
That has nothing to do with politics.
Yeah. All right, guys.
Nothing.
It's not very
Absolute
feminist.
Zero to do with politics.
Not very woke.
It is not woke.
I'm not worried about woke. We don't want to make political enemies unnecessarily.
So let me wait. I'm sorry. I just have to address this. First of all, the fall started at September 16th, 2022. The peak was September. It started falling then.
September. Yeah.
I want to ask Christian and Jeff and maybe Herbert a question. Have any of you ever bought Tesla stock on margin or bought options on Tesla stock?
Yes, I did.
Mm-hmm.
I've bought
Only
options.
because-
I've never used
Now, I
margin.
want to.
So
Yeah,
there's
never
a
used
reason I'm asking this question. The reason I'm asking this question is I want to lay out my thesis for why Tesla, not only why Tesla stock fell, because the whole market fell, but why Tesla stock fell more.
Yeah,
And again,
for sure.
I'm not claiming I can predict or explain short-term stock prices, but I'm going to take a swing at it anyway. Okay. So first of all, it started falling, generally speaking, with macroeconomic issues. And there may have been some other issues like, the Shanghai Gigafactory shutdown because of COVID, which is probably not a result of Elon's political tweets. And it's probably not a result of him buying Twitter. So there are certain exogenous shocks that caused Tesla and other stocks to fall. Tesla is heavily bought on margin. There's no really good industry-wide measure of how much stocks are bought on margin and how much stocks are played and how much stocks are shorted and all these things that are going on. But I believe that Tesla is owned more heavily on margin than other stocks. I believe that there's more option play on Tesla. And when a stock falls for other reasons, people start getting margin calls. And there's something similar that I don't understand in the options world. And that puts more downward pressure on the stock. So as you have margin, as the stock falls and people face margin selling pressure, now you get more, just like on the other side, on the short squeeze side, right? If the stock goes up, the shorts get squeezed and the stock accelerates more. So all of this other action outside of buy and hold behavior on Tesla stock increases Tesla's volatility. So the rises rise faster and the falls fall faster. And so the fact that Tesla stock fell as much as it did was a consequence of all the people who bought on margin and were forced to sell or sold in anticipation of margin calls coming. Because Jason DeBolt, for example, said that he sold some in anticipation that he was going to get a margin call. So he sold to get ahead of a margin call. So that's, to me, and listen, the viewers, you guys can have your own opinions. To me, that's a much more credible explanation than Elon did a tweet people didn't like.
No, just to add on this, I think where these conversations usually go sideways is absolute statements of it wasn't Elon or it wasn't this or it's only this. I think if you start assigning probabilities and portion sizes to these issues, I think you'd find that there's attribution to multiple issues that were driving the stock down. But I don't believe there was a coincidence though. If you look at September week 3, the S&P was exactly where it is today, basically within 50 points, I think. The NASDAQ was within 100 or 200 points. So basically the S&P and NASDAQ are where they are today, and Tesla was $310. And the Fed funds rate, the futures at that point in time versus where they're at today, I mean, maybe it's up 0.75% in terms of the terminal rate that they were going to get to. Auto loan rates have gone up from September to February. There's no question about it, but they haven't doubled in that time frame. So when you look at Tesla dropping, it's 50% lower. It's 50%. It's got 50% to go to get back to that point, or it's 33% lower. It's not clear where you can say where it's all macro, it's all this or it's all that. There was multiple components under it.
Yeah.
So I just want to understand, it's not okay to compare Tesla to Rivian and Lucid and Arcimoto, but it is okay to compare Tesla to the NASDAQ or the S&P 500, which have a whole bunch of stocks in them that are completely different from Tesla. That Tesla's a growth stock. I don't buy the PE compression story, by the way, but the story about macro is that fast growing companies are affected more by macro effects, by the Fed raising rates. I'm not claiming I agree that should be the case, but that is a widely held view. So you would expect Tesla, which is a fast growing company, to experience a greater fall in its stock price when you see an increase in rates than you would see for the market as a whole. We can play this game all day long.
Well,
that's what I'm saying.
We're not going to play it. Look, Warren, I think, you're fine and you may be right, but I think, here's where you lose me. When you compare Tesla to Arcimoto's gone. They're bankrupt. The company's about to be a zero. What are you doing? You cannot compare Tesla to Arcimoto. That's like me saying Apple they got this new phone maker coming out, man. That new phone maker, it's worth $1 billion market cap. It's just down 90%. Apple's down 90. No, Apple's not going down 80% because some new phone maker's going down.
Okay.
It's not going to happen.
Yeah,
Tesla was profitable. The earnings estimates were going up. The stock was behaving. Look, no one knows exactly why. But I think, like Jeff says, if you attribute it only to macro and you attribute it only to the Fed raising rates, I think you're doing yourself a disservice, because what you're saying is, I don't think Elon's sale of stock had anything to do with it. I don't think Elon's political persuasion, whether he's allowed to or not, doesn't matter, has anything to do with the stock. I don't believe that him owning Twitter, for whatever reason, causes chaos in the stock, and maybe it causes people to sell it off because they don't know what's going on. Does he have to sell more? If you just say none of that matters, and the only thing that I know that matters is the macro, you're making the same mistake that you're telling me I'm making, that you know and I don't.
So first of all, I want to make sure the audience knows that Christian and I have talked many times, and I love this guy, and we're having a spirited dispute, but I love this guy, and I think the feeling is roughly mutual. There's probably moments otherwise, but
no, for sure, yeah.
And I'm not saying it's only macro. I want to be very clear. I'm saying macro is the primary cause of the stock falling, like so many other stocks, especially growth stocks, and then margin selling pressure and option selling pressure. So I'm not saying only macro, and I'm saying I don't claim to be able to explain or predict short-term stock price movements, but I find that explanation far more persuasive. Now, I agree with this. I agree that in terms of Elon buying Twitter, Elon's political tweets, here's what I agree with. There are certain voices in the community, whether it's mainstream media or Barry Glack or other people who are personalities, influencers in the Tesla stock owning community, who said that that was true, who said that Elon buying Twitter was going to cause the stock to fall, who said that Elon's political tweets were a problem, whether it's Ross Gerber, Barry Glack, or whoever, Gary Black. I'm jokingly calling him Barry Glack. I believe that that can lead to additional selling pressure. When there are influential voices, Gary has something like 300,000 followers on Twitter. Gary and Ross are going on mainstream media, speaking to tens of thousands, hundreds of thousands of investors on CNBC, and they are preaching this, Elon is hurting the stock. Well, investors are going to buy this, excuse my French, but investors are going to buy their bullshit story. Some investors are going to buy that story, and that's going to increase selling pressure. It doesn't change, and this is where I'll push back most firmly. Short-term stock prices go up and down, whatever. The fundamental value of Tesla is based on its long-term prospects. And Elon's tweets and Elon buying Twitter and the current price, the current interest rate and current margin selling pressure have nothing to do with how many gigawatt hours of batteries or terawatt hours of batteries are going to be in Tesla's products in 2030 and the dollars per kilowatt hour rate they're going to sell them at, which is the real source of value of Tesla then and now. Because all you do is say, this company is going to be worth $10 trillion in 2030. How much would I pay today for a company that's worth $10 trillion in 2030? And I'll tell you, it's a lot more than $700 billion.
Yeah,
I agree with that, Warren.
Can I get in here, guys? Let me get in here. Okay, so I want to move the conversation. We've talked about the stock, what happened in the past, where it's going to go in the future, and I think we've spent enough time there. I want to talk about the mission and where the company's going. I do want to make the point, though, that the issue with Elon and you, Warren, talking about the macro being the primary reason for the stock to fall, true or not true, what it has done is it's caused the re-rating of Tesla. Now people are saying, oh, it's just a car company. We see, I've got factories, I've got cars. It's just like all the other car companies, and therefore let's re-rate it down. And so, people are now saying 100 is a fair price. In fact, I think it'll go down 70. Now they're saying, no, I think we're at the right price now at 200. So what happened though was the macro hit all the companies. And so when you compare it to the S&P, that's because you're looking at the S&P as a general measure of what happened to the macro, to companies in general. It's not that you're comparing Tesla to the S&Ps, okay? Now, a lot of things happened in succession. It got kicked off in September by Elon selling stock that he was forced to sell to buy Twitter, which alone, just because of that knowledge that he had to do it, not because he was afraid of Tesla falling, it's because he had to do it by law. So people should not have been afraid of that at all, but that kicked it off. It then let everybody fall down. And then any negative news, like a potential China recession and so forth, these things kicked it off. And so you're right about margins. You're absolutely correct. There's a margin thing that made it even fall further. There is the China demand. There's a Twitter. At that point, it was pile on at that point, right? So any little negative news just caused it to fall this much. So my point being, let's bring it back to, why is this company being re-rated, or at least being seen by the general public that it's a car company? And then the question I want to ask is that when, Investor Day comes and, Elon going to talk about Master Plan Part 3, talking about the mission. And is this a new mission? I mean, it's going to be a wonderful mission, right? It's the same mission, but this is it. He has a plan for fully sustainable energy for Earth. This is going to expand it. This is no longer, this pie in the sky long-term vision. It is now this short-term vision, which is next 5 to 10 years. We're going to address this. So at some point, we need to, as Tesla bulls, we need to start, rejecting anybody who says this is the right price, because it's not the right price. It's never been the right price. And I don't think 300 was the right price based on what I see in terms of, this is not a car company, right? This is an energy company. This is an AI company. And now in the future, it'll be a robotic company. So, okay, I just want to bring it back to, is the mission changing? And then Warren, what I wanted to ask you was, you've had a vision and you call yourself an overbull and you've got this vision for where Tesla's going to go. Do you think that any of that, or your forecast or outlook, did that change once you are, or after March 1st, when you hear the new mission, when you hear about the new Master Plan Part 3, do you think that you'll change any bit of your thinking?
The answer is it depends. I mean, if Tesla says it looks like we're not going to be able to get to 3 terawatt hours in 2030, and it's going to take us, till 2035, then that would certainly change the valuation. But I got to push back on this idea that Elon's selling stock.
Not too long. Not too long. We already did it. But go ahead.
I'm reading from Forbes magazine. He initially sold $8.5 billion in shares in April of 2022. Another $6.9 billion in August of 2022. Tesla reached a peak in middle of September 2022. Then he sold $4 billion more in November and $3.6 billion in December. The fall started, the big drop started September 16th. So it's disconnected from when he sold. Okay, so
no. The stock did fall from 420 in February. It did fall to 300 something during that period that you're talking about, and it fell from 300 to 100 from September to December.
Right,
but it did fall.
September doesn't coincide. Neither of those dates. February does not coincide. Look, you just said February. The first sale was April. So the start of the fall in February doesn't coincide, and it reached a new lower peak in around September 16th of 2022. But he sold $6.9 billion. The biggest lumps were $8.5 billion in April.
It's not just the sales. It's not just the sales. It's this concept of, is he even thinking and talking about potential Tesla? And then only after the Q4 did they finally put to rest that bit about, which is we're fine. Me buying Twitter, me being the CEO of Twitter did not affect the executive goals of this. Okay.
You just brought up another explanation. You just brought up something we didn't talk about. That now there's the theory that Elon was distracted, right? That the stock fell because Elon was distracted. And the
that is not.
Was distracted.
Well, first of all,
he
was distracted. He clearly spent a month doing Twitter, but he has executives that are incredible, like Tom Jew and all sorts of the 100,000 people that work there, and the company's doing just fine.
Look, it looks like Warren wants to stay on the topic, so I'll stay on the topic. So okay. I don't have all the dates in my exact head, but let's do some general logic here. So the stock plummets from whatever you want to say, 3 whatever to 100. It's like down 75%. Anyone expecting a 75% Tesla decline? I didn't see that one coming. It only happened because of extra events. Now, let me just go to it. So $100, the stock is languishing. Elon gets on the conference call and he says, because people are worried about macro, that's a lot of it too, Warren. I'm giving that to you. Macro, interest rate, of course. The reason the stock stopped bleeding, it's not one event and then we snap and everything's great now. It's a confluence of events. Elon getting on a Twitter space and saying, I don't need to sell any more stock for Twitter for a couple of years. That's evidence one. Okay, some investors say that's good. I don't got to worry him dumping any more stock on me. Then we keep going. Okay, we don't know exactly what's happening. And then Q1, we don't know about demand because everyone's saying demand's falling off a cliff. Elon gets on the call and he says, hey, We got production is double. I mean, demand for orders is double the production. There's another group of investors. Oh man, that macro and interest rates. I don't got to worry about Tesla. They're going to sell every car they can make, even at reduced prices. They told me margins are still going to be 20% plus. That's a whole other group of investors. Oh man, that's great. Okay, so he's not selling stock. The business is intact. And now we're saying, okay, well, Tesla's trading at 100 and whatever. It's trading like 25 times trailing earnings. Smart people, smart investors that maybe don't own the stock say, I got to buy this thing now. I can never get it. Tesla's always trading at a premium valuation. Now it's trading cheaper than the Cheesecake Factory, Domino's Pizza, Herbert, your favorite, Chipotle. And, you know, I got to buy this thing now. And now we go from 100 to just over 200. So the market is very inefficient. I grant you that. But, you know, you can't say that the market is right at 100 and wrong at 200 because it happened like within a week. So the market is like completely, anyone calling the stock market efficient anymore, the efficient market hypothesis, they don't understand what's going on. The market is very inefficient, and sometimes it's very inefficient very quickly, which means it's not efficient. If it was efficient, you wouldn't get 100% move in a stock in like a week. So let's throw that efficient market hypothesis. So that's what I would say. So I don't have all the dates in my head, but we could say no more selling stock. The business is intact. Elon said demand is fine. Then we could also throw on there, and Elon's a little bit more calmer on Twitter. He's not, I don't really care. But what I'm saying is, if you want a stock price to move up higher, you might want to just kind of calm down. Like if Tim Cook gets on Twitter and starts going ape shit, hey, and just starts saying crazy things every day, I'm sure the stock price is going to go down. People are going to go, hey, that Tim Cook CEO, the biggest company in the world, he's having a nervous breakdown on Twitter every day. He's tweeting the craziest things. I bet you the stock goes down. I don't think it goes up. So what I'm saying is it's very short term. And I agree with you, Warren, about the long-term value. But to get long-term value, sometimes you don't want to go down 80% to get to the long-term value. It's very painful for some people. And you might say, well, then they don't belong investing in stock and they don't belong investing in Tesla.
Well,
fair enough.
Don't buy on margin.
But I don't buy on margin. But what I'm saying is sometimes you don't want to go down to test people's investing gut. Some people invest and they know there's risk, but sorry, I'm a little sick.
Wait, do you reject reject my hypothesis, which I'm not claiming I know for sure? Do you reject my hypothesis that Tesla is more volatile because of all the margin buying and all the option buying? And the reason the stock fell all the way to 100 as opposed to say 200 is because people were facing margin pressure, and that caused the stock to fall. And then more people face margin pressure, and that causes the stock to fall more. And it falls to 100, at which point all the people that bought on margin have cleared out. And now there's some bit of news that you guys think is good that the rest of us already knew was true, which they've been saying there's not a demand problem all the way along. They've been saying we're executing well all the way along. The fact that they said it again in Q4 is not news. But somebody in the market suddenly decides, wait a minute, there's some good news. The stock starts going up and there's no margin selling pressure anymore. So you only have upward pressure and there's no downward pressure. That explains, because when you talk about the stock falling to 100, this big fall of 70 or 80% or whatever, that's a sign of the volatility, not a sign of people pricing the value. And that's a result of something like margin selling pressure.
I agree with you that that's a lot of it, 100%. The only thing I will say, the volatility on Tesla, and Jeff, you know this better than me. What is it, like 1.8 beta? So the NASDAQ, if the NASDAQ's down 30%, then Tesla should be down less than 60%, around 60%. But the NASDAQ was down, what was it, Jeff? The NASDAQ was down 10 or 15% or 20 at the max, and Tesla was down 75.
Yeah, there were days that had 5, 6, 7, 8 beta, but it's hard to contribute single days. The only thing I would just say is, I think you can end this debate pretty quickly. I think it's almost bizarre to think that the CEO of a company selling $40 billion of stock in a year had zero influence on the price of the stock. If that's the statement, then I don't know if there's a debate, to be honest with you.
Well, but you use a big number like 40 billion instead of saying he sold less than 1% of the transaction volume over the period of time. This is cherry picking. You're choosing your data and you're saying $40 billion is this magic number.
He sold almost half his position. I don't think even Elon would admit that it had zero impact on the stock.
I would argue that on a very short-term basis, and on a period of days after he makes a sale, that there's some impact. But the market reacts within days and corrects to what the
there's
actual
front running when he's first off the way he sells.
Is front running mean insider trading? I just want to clarify.
No, front running means they know Elon has to sell because of Twitter, and they get in front of it and they sell and they short in front of him selling, which then accelerates it worse.
So how do they know when he's going to sell?
No, they don't. It's not a predictive thing. They see his transactions in the market based on the size. And then there's obviously news swirling about it, and they jump on top of it and short the stock down further. So there's
his transactions, and they front run transactions they already saw. That means the transactions already happened before they front run them.
No.
If you say
he spreads it out,
transactions,
he spreads it out. It's not all once. He spreads it over multiple days, and
but they don't know how many he's going to do.
Well,
it doesn't matter though. They know it's coming. They know it's coming.
There's nobody else that's selling billions of dollars of Tesla stock besides him at that point. They see that, they jump on top of it, and they write it down. But I think the debate's solved. I think you agree, Warren. First off, I don't believe that is the primary reason that Tesla sold off 75%. I think a 75% drawdown is unique, and I believe that him selling was a component of that. I believe macro is a huge component. I believe a number of things. I believe the perceived demand issue, even though Tesla was actually building up excess capacity at the time, the perceived demand issue was also, that news was also driving. So I believe there's multiple components, but I believe the CEO, the fact that there's no insider buys on the stock in over 36 months, nothing. And it's $40 billion of sale. I think that has some amount of impact. I'm not saying it's the primary issue.
Let's change the topic finally. Okay, we spent a whole 40 minutes on this, looking backwards and pointing who did what. I got you, Warren. You're a person who's looking forward. You're the Uber bull. The mission is coming. You should be excited. You should be I want to know what you think if Elon is going to let the other car companies die. If the mission is sustainable energy in the future, and yet these other competitors are struggling. You can see Ford's earnings. Toyota's can't even get their act together and so forth. And their plans are 5 years out. But that's not to Elon's advantage. Now, I've seen the board member, Hiroshi or something. He said something like, they support EVs, electric vehicles for the EV companies, not necessarily ICE makers, automakers. But, so my point is that, I'm sure they're going to be trying to partner and try to kind of have these kind of selling them and partnering with them with the skateboard and maybe the software and the autonomy. But what's going to happen if many of these car companies die? What's going to happen to this industry? It doesn't make them advance further. Or do you think that, he's so confident with robotaxi that, we should be able to take over the whole market, even if everybody else dies? Not that everybody, because I know the Chinese companies are not going to die. I'm not saying every automaker in the US is going to die, but significant ones will, right?
So my prediction is that Ford and General Motors and Volkswagen and Toyota and pretty much every major legacy automaker will go bankrupt.
Yep.
Then they will get bailed out, not by Elon, but by their own governments.
Yep.
So the United States government will bail out Ford and GM and maybe Stellantis, and the German government will bail out Volkswagen and BMW and Mercedes, and the Japanese government will bail out Toyota, and the Korean government will bail out Hyundai. And although I think Hyundai might actually survive. Hyundai Kia might actually survive. They're doing pretty well. But the bailouts will come with strings, and the bailouts will not fundamentally change the problems that prevent legacy auto from competing effectively with Tesla. They're not going to get them. They're not able to innovate. Tesla's advantage is there's many different advantages, right? They have this massive engineering. They do everything. They're vertically integrated. They innovate so fast, and the other car companies don't innovate fast enough. There's so many different moats, if you want to use that term, that I don't think that the other car companies will catch up. I think that they will fall further behind. Just like SpaceX is accelerating its lead in the launch industry, I think Tesla will continue accelerating their lead in the car industry. I do think that we will see vibrant competition from Chinese car companies. I think Rivian has a chance of surviving and competing a little bit. But I do think the other point we need more EVs. If Tesla delivers 20 million EVs in 2030, and they have a working robotaxi network at that time, each EV, each Tesla car that's a robotaxi is effectively doing the work of 5 new cars. So what you end up with is current global market for new cars is in the ballpark of 60 or 70 million vehicles a year. So if Tesla does 15 million vehicles that are sold as robotaxis, and they do 5 times as much work as a regular new car, then you've got 75 million. They're doing the work of 75 million new cars, which is more than the global market today. So Tesla could, in theory, supply all the vehicles necessary for the global market. Then you have the problem that governments will decide Tesla's got an unfair monopoly. And that's a whole separate issue that we could get into. But I don't think there's any I don't see a way to save Ford, General Motors, Volkswagen, Toyota. They're ossified. Think about Kodak. Kodak got run out by digital cameras, Polaroid. I mean, they're like vestiges of their former selves if they exist at all.
Yeah.
What happened to what did the iPhone do to Nokia? And there's like
Right.
little tiny vestiges of those companies. I mean, it's the same thing with the iPhone and Android, right? The iPhone and Android wiped out the flip phone market. Does anybody feel bad and think we need to go back and resurrect the flip phone industry?
I actually think the bailout has started, Herbert, already. Starting with the Supercharger network. That is the first bailout of Tesla bailing out the rest of the industry. And you're going to see our government force some sort of deal between Tesla and other auto OEMs, or maybe also make it contingent upon Tesla receiving IRA funds. None of this is confirmed. There's just reporting on it. But I believe the bailout is going to start with the charger network, because these companies are working on EVs. They're showing commercials. I think they're putting a charger in the commercial, but there's actually very few, if there's no real way for somebody to travel across country reliably in a car that's not a Tesla. So I think it's going to start with the Supercharger network. I believe the other options are obviously FSD, when FSD actually matures and it's something that you would license. Tesla has the approach from a cost structure perspective on FSD. It can scale within Tesla, and then it can scale across the business. What the other robo-taxi vendors are doing is small volumes, high cost, and it can't scale geographically. The third area they may be able to help them on is help them up the efficiency curve in terms of the motors, the inverters, and the efficiency of the battery pack, and that whole system that Tesla engineers in the US, they build in Nevada and ship to the factories, and eventually now Austin. That allows Tesla to use less energy per vehicle to achieve minimum mileage. I think this is where these other automakers, why they can't make money, is because they have to buy too much energy. They pay more per kilowatt hour, and they have to put more in the car. The Hummer EV is a 9,000-pound car that needs 212 kilowatt hour battery. So I think those are the 3 areas, and I think the bailout's actually already started.
I agree. I'll just jump in real quick. So me and you talked about this, Herbert. I told you that I don't think, you said there's going to be a lot of EV winners. I don't think so. I think the EV winner is going to be Tesla. Yeah, there might be some other companies that survive, but like that Dodge Ram commercial, to me, when I watched it, they were not promoting an EV. You know what they were promoting? Not to get an EV.
Not to get
what they were saying is, that's what I heard. What they were saying is, no, everyone out there, you can't buy an EV yet. 2024 maybe, because there's range anxiety. So they're actually preying on the uneducated consumer to say, you don't want this yet. Now we're going to make a great one. If you want it, it's probably ours, but you don't even want ours yet. 2024 maybe we'll get it out to you, but we're still working on. They don't want to sell any of it. Okay, they don't want. It's all a show. We all know that. Yeah. But people watching that ad, if they were interested in EV, unless they understand, let me go check Tesla and do all that. What they came away from that video, from that commercial, was EVs may be coming, but not for me. It doesn't have charging, and I might get stranded and all. That was a clear attempt to dissuade people from buying electric vehicles, not for people to buy their electric vehicles.
Yeah, I just want to. Can I respond, Herbert?
Okay. Yeah.
Just on Jeff's point, I agree that something's going to happen, but I think Tesla was planning anyway on opening the version 4 superchargers would be open to other EVs anyway. I think that was
agreed.
And they've already started doing it in some other places. That's actually helps Tesla because, at least according to Drew Baglino, they make a profit on their superchargers. So increasing the customers. And then here's the problem. Imagine you're Ford or Volkswagen or General Motors or Toyota. I mean, Toyota doesn't have any EVs. I don't know if they're ever going to have EVs, but imagine you've got the Ford Mach-E, right? The Mustang Mach-E, or you've got the F-150 Lightning, or you've got the Volkswagen ID.4. All right, in order to charge the Tesla supercharger, number one, you have to pull in a place that has Tesla branding all over it and lots of Tesla cars in it. And then you have to have the Tesla app on your phone.
Yeah.
So if I'm Ford, do I want my customers charging in a place that just bombards them with Tesla branding? And then they step out of their car and they're talking to a Tesla owner and they're like, oh, what do you think of your car? Oh, blah, blah, blah. And the Tesla owner starts showing them all the cool stuff inside the Tesla car that the Ford doesn't have. And the guy feels like an idiot for buying a Ford EV. Yeah. So
agreed.
I think that the other vehicle manufacturers do not want their customers using Tesla superchargers. They don't.
No option.
And they don't.
But they don't have an option.
And the idea of them licensing FSD from Tesla, if you go back to the computer industry, and every computer had Intel inside on it, and every computer had Microsoft Windows on it. You're imprinting other brand names on your customers that you don't want them to be imprinted. So both with the supercharger network and with FSD, the other car companies do not want to give Tesla more branding than they already have. So, and it's like they can't live without it, right? Yeah. Their EVs would be much better if they did access the supercharger network, much better for the customer. Their EVs would be much better if they had FSD, if they did but so it's good for the customer, but it's not good for the brand of the company. So they're in a real tough spot there.
Agreed.
Yep, agreed as well. But there's going to be one or two that's going to fall, and they're going to start partnering. Okay, so we spent the first 40 minutes talking about the past and stock. Then we spent the next 20 minutes or 10 minutes talking about cars. And I think we should stop talking about cars anymore. We won't. But my point being that Tesla is now an energy company. Okay, Tesla Electric went live in January in Texas. They're now a virtual power plant. And in California, we're starting to see customers of the Powerwall actually making money, getting paid by the power utility companies. We're going to hear them in Master Plan Part 3 and Investor Day, talking about mining and refining and mining and getting all the mineral resources. They're going to talk about megapack factories and more factories. They're going to talk about how to have a sustainable, fully sustainable for Earth. And so I think they're going to talk about milestones about solar farms. He keeps repeating that there's 3 things that you need in order to get a sustainable future. They're going to talk about solar farms, energy generation from the sun. And so I that's what we should be talking about now. I want to hear your thinking about this new mission. It's the same mission, really. It's just more like, okay, cars, here we go. Let's move on to the next big giant thing for the next 5 to 10 years. What's your prediction of where this might go?
You want me to go?
Sure. Yeah, please.
Sure. So first of all, I think I'm working on a video on this for my own channel, but I think that people are missing what Investor Day is about, and I would say to some extent, the way Elon's talking about it may just like the Investor Day image that showed the Model Y stacked.
Yeah.
The most important thing in Investor Day, in my opinion, is how are you going to get enough battery minerals to produce batteries at the scale that you need? And I just saw a Jeff Don video. There's a video with Jeff Don speaking to some
sodium.
Group. No, he did not talk about sodium as the solution. No, I mean, he said that sodium's not ready for prime time, but he was saying that the expectation of the available materials and the battery production capacity in 2030 is something like 4 terawatt hours when we're going to need 10. If Tesla's going to have 3 terawatt hours, the rest of the world, CATL is not going to only supply Tesla. LG Chem is not going to only supply Tesla, Samsung, et cetera. There's other companies that need batteries. The world is going to need 10 terawatt hours of batteries in 2030, and we're only on a pace for 3 or 4 terawatt hours in 2030 in order to get to the sustainable future. Because this isn't just about Tesla. This is about the world transitioning to sustainable energy and sustainable transportation. We need more battery materials. And there's no clear path to get there right now. And I've seen Elon talk about it on occasion. I've seen Drew Baglino talk about it on occasion. I think Jeff Don talked about it a little bit in that talk. Something has to happen. And I think Tesla has a plan to lead to, and primarily lithium. We need a lot more lithium. To some extent, we need more nickel. probably manganese. I've seen references to copper. I saw Drew Baglino talk about graphite. Not just that we get more of it, but that we get more of it in a more cost-effective manner so that we can drive the cost. Not only can we get more volume of batteries, but we can get the cost of batteries to start going down instead of up. Because if you put all this demand on lithium and you don't have supply, then the price of batteries goes up and it's hard to make affordable products. So I think that's the most important thing on Investor Day. I do think we're going to see the Generation 3 platform vehicle, some significant amount of detail on the Generation 3 platform vehicle, which I think is going to be like hyper efficient. Like the Model 3 right now is somewhere around 4.5 miles a kilowatt hour. I think the Generation 3 platform might reach 6 miles a kilowatt hour, maybe better than that. And that's something that you need. And then you can deliver a vehicle with a smaller battery pack. You can go to a 40 kilowatt hour battery pack, still get 240 miles of range, which is enough for an entry-level vehicle or a robo-taxi. And then you can increase the number, because if you do a 40 kilowatt hour pack instead of an 80 kilowatt hour pack, you can make twice as many vehicles with the same number of batteries. So I think that's big. I don't expect them, I think they will talk in general terms about Tesla Energy, but I don't expect, and I could be wrong, I don't expect them to give much depth or detail on Megapack, because they've already there's already talked a bit about Megapack already. The one thing that I could see happening is they're due to announce the next generation Powerwall. I don't know if that'll happen at Investor Day, but that is something that we've been waiting for. The next generation Powerwall will use lithium iron phosphate instead of nickel-based cells, and iron cathode instead of nickel cathode, and that enables higher volume, lower cost. They'd be slightly larger. So, but solar panels, like I've been wondering for more than a year now, where's the solar? I think the answer is that China is buying all the solar panels and deploying them in China, and we just need a higher volume of solar panels produced, and I don't know where that's going to come from, and I don't fully understand why we're not deploying more solar in America. I think it's just there's so many regulatory hurdles that get in the way. You saw this in Germany, right? That they wanted to put solar panels in the parking lot of Giga Berlin, and they hit a regulatory hurdle. Like they're stopping them from deploying solar panels.
No.
So stupid, because you're putting concrete piers in the ground. It's just so dumb. So my best guess is that there's all kinds of regulatory hurdles that are keeping people from deploying solar panels in the United States and other countries in higher volume than we're seeing now. Fortunately, China's doing it in very high volume, but we need to see more of that. So will they address solar in Investor Day? I don't think they will, but I think it's possible. And I think it's an important topic. I just don't know if Investor Day is the day for it.
Okay. I have a few thoughts there that I think conflicts a little bit what you're saying. They will be talking about solar. This is going to be about mega packs, because this is the opportunity for them to change the narrative that we are an energy company. That's what I'm thinking about this. When he says that this isn't just about investors, this is about for the people in life on Earth. He's talking about solar. He's talking about battery storage. He's talking about minerals. He's talking about once and for all solving this issue. He's got a plan. So it's going to be 100 square miles of solar farms. I'd be shocked if he didn't talk about that at all, because how are you going to solve this, right? You need to have energy generation. So,
well, I think that they still want to do solar roof and solar retrofit. I think that solar farms, I mean, I love the idea of solar farms, just to be clear. I think solar farms are great. But I think that they're working with builders. We saw this development outside the Boring Company with Lennar. I think they're working with new home builders to deploy solar roof. I think they're trying to increase solar retrofit, which is putting solar panels on an existing roof. I think
the only thing I'll say to you is that there's been, I think, more than just rumors that project managers for solar for residential has been cut back significantly for Tesla. They've been firing them. And I think that they're reducing their efforts in residential. And I think where they're going to increase their efforts is commercial. So people who buy the mega packs for the Tesla Semi, their roofs, Costco, Home Depot, their roofs. But I think that this is what they're doing. I think they're stockpiling this. They're going to put it for the superchargers, and they're going to probably do a solar farm. That's why I'm saying solar farm as opposed to what you're saying, which is, commercials or roofs. But
yeah, no, I actually like your theory. I'm not sure. I think they will talk about solar and energy storage in broad strokes on Investor Day. I'm not sure how much detail they're going to give, but I love your suggestion. I tend to agree that the regulatory hurdles and other hassles for residential solar are greater, and commercial deployments tend to make more sense. They might get better treatment from utilities if you do a large scale, like a solar farm gets better treatment from utilities than residential solar gets when they're net metering. So I think
And
you're
then-
making some really good points there.
Yeah.
I'm not sure that's going to be covered in Investor Day, but I agree with you. That's where they might go.
Well, I think the reason the other thing I want to talk about is I think that they're going to change the business model, like upend it completely, right? So they're starting to show signs that you can actually make money. Forget the fact that it's now electric vehicles are on par now with ICE vehicles, but I think you can actually start making money when what do they call it? Electric vehicle to grid and selling that back, your car, not a Powerwall, your car. And then if they have insurance, and then if they show you that solar can actually bring back more money to you, what kind of business model is that, right? It's like, forget any other option. You're going to go this route. So I'm hoping to share that.
I've been the biggest naysayer on vehicle to grid public, like on YouTube.
Really?
Yeah. So here's the problem.
Yeah.
When do you drive your car? During the day.
Mm.
When does the grid need the energy? During the day. When is your car plugged into the grid at night? When does the grid not need energy at night? And then if we're heading towards a robo-taxi future, my vision of a robo-taxi future is the robo-taxi operates from 6 a.m. to midnight, roughly, with some break in the middle to charge in the middle of the day. So the largest demand on the grid is, at least now, is like 4 o'clock in the afternoon, 6 o'clock in the afternoon in places where it's sunny and the demand for air conditioning is high. At the middle of the night, the temperatures are down. You're not seeing as much demand for electricity. This may change when you have a large number of vehicles charging. The demand structure may change. And the other point is that a vehicle battery has a certain number of cycles in it. Okay. It has, let's say, 2,500 cycles, right? It's the battery's going to, if it's got a 400 mile range vehicle, and it's got 2,500 cycles in it, that means it's a 1,000,000-mile vehicle. The value of that cycle in use in a vehicle is 10 times as high as the value of that cycle feeding the grid. And once you start to get to enough megapacks and virtual power plants with Powerwall and all these other things stabilizing the grid, the added value of plugging a vehicle into the grid is trivial. Now, the value of vehicle to home, there's some value there. Like, I live in hurricane country. So to be able to plug my car into my house and back up my house when the grid fails, yeah, there's some value in that. But that cuts into Tesla selling Powerwalls as well. And again, the electrical infrastructure you need in the home and on the grid to enable vehicle to grid at scale, I think people underestimate the cost and they underestimate the value that's generated by doing it.
Yeah, I'll agree. I'll just jump in. I'm where you're at, Herbert. I'm like, what is going to change the perception of Tesla from, an automobile company? And I think the perception is changing, but the reason the auto business is so important is because that funds everything else, right? That's where all the money's coming from to fund this other thing, so we don't have to draw down the cash balance that much. So it's important in that sense that the car business is humming on all, in every facet, because you need this thing, especially China, over the next year or two to really fund this growth of new factories and everything. And to the solar point, I'm not an expert. Warren's an expert in solar. I don't really, it's a little thing to me. Like, it's hard to scale that business. Elon talked about that a couple of years. He's like, solar roof is going to be a kick-ass product and we're going to do millions of homes. None of that happened. It just didn't. It's just wrong. So it's hard to scale it. It's hard to get people to do it. It takes weeks to put it in. You got to get, for me, I like no hassle. I don't want to deal with utilities and permit. I don't want none of that. Okay. I just leave my roof working good enough. I don't care. And most people are like that. So you're right. The best way to do it is on a new home and already have a solar roof when people move in. That I do like that strategy. But again, that's going to be a fraction of the homes in the world because most homes are already built, right? But that is a good strategy. So it's just hard to scale that business. So I love the mega pack because that's a known quantity. They know how to do it. Get the batteries, put it in, put it out, stationary storage. It's a great business and the ramping margin. So I agree with you. Solar to a lesser extent. But I think if Tesla could show that they have this other piece that's generating billions of dollars and then billions of dollars of profit from the stationary storage business, i.e. megapacks, then that would change the perception that that Tesla is just an automobile revenue machine and they're also this other thing. And it just gives them a little bit more of a rounded company rather than people just saying, hey, you're basically all your revenue comes from here. So we're going to just treat you like that. And yeah, you're going to get a premium valuation, but it's never going to be, you're never going to be a multi-trillion-dollar company if you're just an automobile business. But it allows the research and development for Tesla bot. it allows the research and development into improving FSD. So basically, you need that business to keep going heavy, and you can't have any interruptions, because that then disrupts the rest of the plans that Elon has for the next 5 to 10 years.
Just really quick, I want to disclose that I'm potentially working on a startup that will involve solar farms and housing. So I won't go into more depth, but I do have.
You're dropping the pod car. You're dropping the pod car startup.
No, right now I'm working on both.
Okay, so let's talk.
I probably will
Megapack.
wake up and only do one of them.
Yeah, well, you can be Elon. You can do both.
Mini Elon. Baby Elon.
Yes. What about Megapacks? Let's talk about that. So Megapack, like you said, Christian, makes the most sense because it's quick and easy for them to make. They were able to launch Lathrop and get them production
Like
within a year and a half. And now that they've got this on track, it can even be faster, possibly. They've started to sell it to utilities, and these deals are happening. And the business model is showing that it's working really well for them. And they're continuing to make these agreements. They just seem to, be glossed over that they signed this $100 million plus deal that just happened last week, and people are like, whatever. Now this is going to be bigger and bigger deal, but is it because, well, it's not really going to materialize this year? And aren't they going to make efforts to really go after utilities and commercial, by the way? So these Megapack sales, along with the solar, I think it's going to be the solution. But what's your thinking on all this Megapack debate that's been going on by the bulls against the bulls?
What do you think, Jeff? We haven't heard from you for a while.
Go ahead, Jeff.
Just really quickly on 2 seconds on Investor Day, I think Tesla will show how they dominate from pulling minerals from the ground to energy delivered to the customer, and that loop in terms of the sourcing and fabrication of batteries and energy, all the way to how they engineer the conversion of that energy into delivery to the consumer, whether it's in the form of an automobile, which I agree with Warren, they're going to push that performance in terms of efficiency in the auto. I believe they're going to push that performance in terms of stationary storage. And I believe that they're going to show that they dominate that loop. And they're going to show, to me, that loop is the massive scale piece that they're talking about. That's the core of the massive scale piece that they're talking about. And then it's going to apply to auto. It's going to apply to stationary storage. They may mention, in terms of the full loop of like the solution for Earth, I think Elon talked about, they may mention solar, make a reference. I agree with that. I just don't know if they have the full solution on that. In terms of Megapacks, the sales pipe, that is ramping. It seems like that is ramping in the background. We're starting to see these deals. We're not sure where they are in the pipeline. There's some that are being reported. There's some that are not. There's some that are in earlier stages of the sales pipeline. There's some that are in later. I think that's just going to continue. That momentum is going to continue. Same thing with the ramp in the factory. We've got a range of where we think this could be in terms of ramp. We don't know for sure. We don't have a Chinese spy balloon that's over the factory 24 hours a day. We have drones that go up for a few minutes and can capture day-to-day movement, but we really don't know what's going on. So I hope Tesla talks about that and talks about that ramp because there's a range that's on it. But the positive thing is, I think the low end of that range and the higher end of that range is going to continue moving to the right, in the positive direction. So I'm pretty excited about it. I believe that is part of the end-to-end energy story that they're going to talk about Investor Day is Megapack. I think there's a range on where it's at. And I think it's just moving to the right.
I'll just jump in and point out that in Q4 of 2022, they had their best energy generation and storage revenue ever, which was $1.3 billion. Total revenue for the company was $24 billion. So it was just over 5% of revenue. So if Tesla Energy, I think they've said they're going to be potentially triple, right? Yeah. Then that would get them to 15% of revenue, except auto hasn't stopped growing. Auto is going to grow 50%. The company as a whole is going to grow 50%. So, energy may hit 10% of revenue in 2023. Probably not. Maybe by Q4 of 2023, energy hits 10% of revenue. So I think long term, it's a massive growth story, and it does reach potentially 50%. It will reach 50% of the batteries used by 2030 potentially. But from a revenue side of things, you have to remember that once FSD and assuming FSD and
Right.
robotaxi kick in,
It's catch up. Yeah.
then
Catching up.
the revenue and profit story from vehicles shoots up again. And if bot kicks in, then the revenue from that kicks in and goes up. So energy is half the batteries, but it may never reach half the revenue. And
I don't know about
or half the
never, but
profit.
yeah,
And I
long
do
time.
think we didn't talk about margins. Did we talk about margins? I think there's
Let's do
tremendous
it.
potential. I've
Yeah.
been saying for a couple of years now that I think the potential, once you scale production of Megapack and Powerwall, you could be talking about 50% or better margins. Because if you just look at the content, right, the primary component of a Megapack, let's say, is 4 megawatt hours of battery cells. If you get the cost of those battery cells down under $100 a kilowatt hour, let's leave them at $100 a kilowatt hour for now, you're talking about $400,000 for the battery cells. And that's the primary, most expensive component of the Megapack, but you sell it for $2 million. So even if all the other components together are another $400,000, you're at $800,000 cost for something you're selling for $2 million. You got $1.2 million in gross profit on a $2 million product, right? So that's like 60% gross margin. Now, I think there's other things that come into play. I don't really see downward pricing pressure on Megapack anytime soon. Maybe I'm wrong about that. There's really no, the competition is coming, I'm sure, but I don't see any competition on the horizon. And the market is so large. The market for Megapack, the market for Powerwall, the market for solar is so large that it's like if other competitors suddenly came along and produced just as much as Tesla, there still wouldn't be price competition because the demand is so much larger than the supply. So I think that it's a big story, and the margin side of it is big. Like the revenue side of it may not be half the company, but the margins could, of course, margins from Robotaxi are insane and margins from bot are insane. So there's a lot of, when you go out to 2030, you can tell a lot of stories, and we can, just like we can't predict short-term things, we can talk about long-term things, but the world changes by the time you get to 2030, and who knows?
They have a SaaS business that they're getting almost zero credit for right now. Basically, they could grow SaaS on the auto side, they can grow it on the energy side, and they're essentially getting. I mean, it depends when the multiple was up at 150, maybe they're getting some credit for it. But I think where it is today, they're not getting the credit for it. And one thing
just so people know, SaaS is software as a service. Can you explain what do they do that counts as software as a service so the audience knows what we're talking about?
Yeah, I mean, on the one example would be FSD and then eventually Robotaxi. So it's basically when you purchase the car, and then from Tesla you buy software add-ons, whether it's the entertainment package, whether it's full self-driving, whether it's just navigate on autopilot. Those are features that Tesla develops with their below gross margin cost structure and their R&D, and then they can basically sell them, if you exclude OpEx for 100% gross margins. Obviously, when you include the OpEx in, it's not. So yeah, it's basically a service that Tesla can sell with some recurring revenue.
Yeah, and I'll just say about the energy business, Warren's right. It's still a small part of the revenue, but that's the opportunity, right? Because if you look at it, if Elon's right, and Q4 over Q4, I believe, was 150% growth. So if they can go from, say, 6.5 gigawatt hours in last year to, say, 18 gigawatt hours in 23, and then you triple that again. Now, I might be optimistic, and you get closer to 60. Well, now you got something cooking, right? Because if the unit growth is growing 40 to 50%, and you got energy growing, like Elon says, we know it grew 150% year over year at the Q4 22. If it does literally go 200%, which is a triple, then you're talking about bigger numbers. And in 3-4 years, that energy business has a huge, revenue number now. And if it does have these 40 or 50% margins, that is definitely going to be, a significant driver of earnings, which would, show the world that, like, it's more than, a car company. It will take maybe 2 years, but you'll see it in the financials. And the one thing Wall Street understands is a chart where you could see it going, up and to the right year after year after year. Eventually, they're going to say, hey, this, they're doing this and they're making money on it, and they're going to model it. So I don't know. Just want to say.
I agree. Hey, Herbert, can I say one more thing just on batteries energy? I think this is really important, and it's going to be a 30-second thing on their battery supply chain and what Tesla is doing. I think at the end of this, hopefully you would understand that Tesla's got a real sustainable advantage that others right now are incapable of replicating. Look at what Ford just did with cattle and building this battery factory in Michigan. It's cattle technology. Cattle's going to select the CapEx. Ford may be buying it. Ford's building the factory. It's a Ford factory, but they're going to pay cattle a license. Similar relationship with similar puts and takes of what Tesla has done up to this point with Panasonic. Again, different relationships, but essentially car OEM working with a battery supplier and partnering together to produce product. Now, take what Tesla is doing. Tesla's actually, and then GM's doing that with Ultium. They're all working on partnerships together. Tesla is respecting those partnerships with cattle, with Panasonic. They're going to grow those partnerships, but on the side, they're building their own battery business. And what they've brilliantly told the supply base, and it's a believable story of like, look, we're gonna use you, but we need to build up we need our own source of supply. Because this is going to be so big. We're very confident in our numbers. So they're building up that battery network. Their yields are getting better on the 4680. The supply is getting better on the 4680. Guess what Tesla is going to have that no one else is going to have? They're going to have their own battery supply chain. So when they negotiate with Panasonic, they negotiate with cattle. First off, they're not on the same playing field with Ford and GM already because of their volumes and because of the stability of their demand signal. Tesla knows exactly what they're going to build. They have very few models. They know what they're doing this year. They know what they're doing next year. They're a great OEM for battery supplier partners. So every battery supplier partner wants to work with Tesla. But Tesla now has this hammer of like, they're going to have their own battery, all the way from extracting it from the ground, all the way into a complete battery pack solution for energy storage and for auto. I don't believe this. I don't hear any analysts talking about the advantage they're going to get and leverage they're going to get in pricing, certainly not on TV, from having this supply chain, having their own supply chain in concert with the rest of the battery supply network.
100%.
Good point, Jeff.
All right, last 15 minutes. Let's bring back the conversation to the stock, our favorite conversation. Okay, is Tesla a buy today? And,
Yes.
of course it is, right? But I mean, let me kind of set the stage, right? When Amazon, Jeff Bezos did a very smart thing. He said it's always day one. Every single one of his annual letters, it's day one. I think Tesla is at minute one. Come on, guys. This is at minute one. This is going to be the largest company in the world. It's going to be the largest, most consequential company. It's attacking the largest industries you can think of, and there's no stopping them from attacking other industries. And when we start thinking about as an investor, I reflect back in the last year, 2022, and am I happy with the progress that Tesla's made? God damn, yes, I am. Holy shit. But why would I not be happy? Tesla Semi launched. Yes, it was delayed. Cybertruck's on track. The two factories are now, sure, it was delayed, but now they're moving fast. Why do we care about a delay? What matters is, does it get done? And are we there now? We're seeing mega packs. We're seeing them talking about robots. We're seeing all these progress with FSD. Things are moving the way I want it to. If I want to invest today, I am so much more confident with the balance sheet. The cash keeps growing by $2 billion every quarter. It's just crazy how much money they have, how much margin that they're making, despite the massive, kind of a macro that hit every company. The world, basically, a global recession that happened last year, or at least kind of this macro issue. So when I look at the stock today and I'm going, my gosh, this company is in a better position than it was when I started buying it 13 years ago, and certainly from last year. So why are some people kind of still sitting there going, what, I'm so upset with Tesla and all that. So my question to you guys is Tesla stock a buy today from your perspective? And what are the risks to Tesla today, as opposed to what it was a year ago? What is it now? And what are you watching for that would make you concerned about investing in Tesla?
I'll go real quick. So I agree with you, Herbert. I like to call it Tesla 2.0. I think we're in the first or second inning of the story, to be honest. We're not in the first, second, because basically it took them 10 years to become profitable, right? Essentially, I don't have exact year, but it was a grind to get there, and now they're a profit machine, right? That's one leg of the story. Can you self-fund yourself? They can. Okay, so that's step one. And not only they're doing it great. With the earnings growth, revenue growth, check mark, right? Now, I think where the problem is, and I'm a stock guy, but so I'll throw that. Well, I'm going to answer your question, but I also want the audience, and not the audience, Jeff and Warren to answer this. As the stock keeps going up, I know long term we think it's wonderful, and 2030 everything's going to work out. Just hang in there, great. But there's a long time between now and 2030. So, what risks can happen? I think, Warren, you talked about this, and I always worry about this, and I worried about this when they shut down the factory, China. Geopolitical risk is one of the big risks for Tesla. It's just undeniable, right? Now, you could say, well, they'll get through anything. But guess what? I don't want to get through something like that. That's a very painful get through. Now, you could call me whatever, but I don't want to go through that kind of pain anymore. So I want that factory to remain open. I think we're over the COVID, and I hope geopolitical tensions go well. Because if it doesn't, even though long term it still might be fine, you're setting yourself maybe back 2, 3 years, 4 years. And then your 2030 story isn't a 2030 story no more. Maybe it's a 2040 story, 2050 story. Like, that's a long story. I might be dead. So, when in our investing, we want to make sure, like, maybe in the next decade, we're going to make some money. So you have to, that's the way I look at it. Like, I love the mission. I do. And you guys, I think, are more mission oriented than me. I'll just be point frank. I'm about also making money. I'm about investing and getting a good investment and getting return on my capital, right? So that's the big story, China, right? Elon needs to keep that relationship. Other than that, I don't worry as much. I think they're going to find a way to get the materials they need. They're going to find a way to deliver the cars they need to. They're going to find a way to get the energy storage out. They're going to find a way to do all those things. I don't worry about that. My worry, and it's a small worry, I think it's less than 10% chance that there's a problem, because China, as much as we want to talk about it, they need America. We buy a lot of their stuff. We trade. We both need each other. China is not an independent. Everybody acts like China is this one and be all. China is dependent also. They're not just they have a lot of debt. They have a lot of people. They have a lot of leverage in their system. And they need America too as buying power for what they make, right? They can't just, create enemies all over the world. We have India that could fill up that spot. We have, emerging economies in South America, Brazil. There's other places to go. I grant you, it might take time to build supply chains, but we see Apple doing it. They're moving some of the supply chain from China to India. So we can do it. And guess what? The population of China is going down. India is still growing, right? And they're a democracy. Now, they still have a lot of problems, and I understand they have a lot of, chicanery in their politics. I get all that. But they still have a lot of people. And when you got a lot of people and a lot of poor people, just like in China, can become middle-class people. So India is a great growth story for the next 10 to 20 years. And I think, Elon should invest in India. I know it's hard to get in there, but maybe do something on solar. Maybe you don't do cars, but maybe you do energy store. I don't know what it looks like, but I think that would be a great place to get your foot into. So I'll just send it on that. And then I just have that's it. I'll end it there. Go ahead, Jeff or Warren.
Jeff, go ahead.
I mean, full disclosure, I consult on geopolitics and supply chain with a lot of large companies. All I will say is the China risk is real. And Tesla and other companies should be preparing for it. And it's a question of what and how. I believe that if I were working with, you need another Asia factory up and going as quickly as possible. Whether that's Indonesia, whether that's India, I would say Indonesia probably has 2/3 the population of the U.S. And of course, India is 1.4 billion. It's interesting. And I won't get too wonky, but Tesla runs a very solid one-piece flow model in terms of their factory, where they don't have this gigantic network. They have suppliers. People should not get it twisted that Tesla doesn't have a supply base. They absolutely have a large supply base to deal with, but they do a lot of their components in their factory. So I believe that they could bring up a factory in one of these locations faster. And with having fewer nodes between them and the supply base, they could actually they could outpace someone in bringing up another factory quickly. The more factories that are brought up outside of China, the more pressure that puts on their government to conform and to not do a lot of bad things. So there's issues, right? I mean, I'll put it this way: there's significant movement. What you see in the papers and in media today, there's actually greater movement right now in terms of reinforcing supply chains in other countries. So I believe that's it. But Herbert, can you get back to your original? This is about risks between now. I believe so. Geopolitically, there are some risks. It may not only be China. There may be other risks in other countries. I believe that's one of the risks, that we have to deal with. And then the other risk, I believe that Tesla goes after these really difficult technologies, but it's also how they build their moat. And the risk will be is in the implementation and how successful some of these things are. There's always going to be risk inherent in that. And I would say the final thing is just understanding how they're going to act as a very big company. It was strange when Tesla was Fremont only and then Fremont China. It actually wasn't clear for a certain point in time of like who's running operations, like who makes the factories go, like who's actually running this. And I think it's now becoming more clear that they're operating more as a bigger company. So I don't think in the outside, I don't think it's very beneficial for us to try to construct like what their org chart should look like. I believe Tesla's a unique company and they can do that themselves. But just understanding a little bit more of the team, and I believe Elon's been doing this purposely in the last year, is really showing that next layer of talent in the company. But it's not for us to decide they need a COO, they need this, they need that. Let them decide that they're doing quite well on their own. But I believe that is also another risk just to manage of just building up that just continuing to grow it. I'm not saying it's deficient, it's horrible. It's just more of like, you're going to be a gigantic company. Like Warren said, you could be making $1 trillion or more in revenue. That's going to be more nodes, more factories, more technology, more business units, and just building up that next layer. I think is another key risk.
Real quick, Jeff, is Tom Zhu? Is it fair to say, I don't know if this is true or not, that he's running all the factories? Basically, they're reporting to Tom. Do we know that? Like, what is he doing now? We don't know what he's doing.
There's no announcement that. I mean, there's just people that see him at factories. I think Tesla needs to tell us that.
Okay. Because I would like to know, like, if he was in charge of, like, basically the go-to person for factory, like anything factory related, Tom Zhu's in charge. So if Cybertruck's not getting built, Tom Zhu's making sure Cybertruck gets built. Like if China's having issues, like Tom, something like that. So I don't know.
I don't think we need to know that. I think we know from the investor calls that Lars Moravi's in charge of the Cybertruck development. We know that Drew Baglino's in charge of 4680. We know that Drew Baglino is in charge of Solar Roof and Superchargers. We know this because Drew Baglino talked about that he runs supercharger operations in his talk at Stanford. He was the guy who was on stage at Battery Day. It's not new that Tesla's featuring inside employees, but I want to turn to the geopolitical risk. There's this obsession with China, and it's not just you guys. There's this. I actually have my YouTube comments. If somebody uses the term CCP, the comment is automatically held because there's so much anti-China bias out there. The comment is automatically held for me to review it to make sure it's a reasonable comment because it's just. And here's the reality. The one place where Tesla was able to build and start operating a factory faster than anywhere else was China. The greatest threat, the greatest political threats to Tesla are the American government and European governments. The idea that the Chinese government, absolutely. Look, I mean, you've got a president of the United States.
I love you, Warren, but some of the stuff you say, I love to push back on.
Go ahead. You've got a president of the United States who openly criticizes the CEO of the company. The administration for something like a year wouldn't mention his name or Tesla's name. The Democratic Party is at war with Elon for over a year. The European governments, the German government keeps giving Tesla crap about trying to get a factory going. Look at how fast Shanghai got going. Shanghai got going faster than Giga Texas, and Texas is probably the freest place in the United States for building and deploying and getting a factory going, and Shanghai got going faster. But I wanted to just push back on another point, which is the notion that India and Indonesia are important markets. They're not unimportant markets, but I've been saying this for a year or more now. The next market that Tesla needs to reach is Japan. Japan is the third largest car market in the world. The third largest car market in the world after China and the United States. Japan is the third largest car market. The next generation vehicle will be built probably in Osaka, Japan, where Panasonic is building a 4680 factory right now, Wakayama, Japan, right outside of Osaka. And Korea is very likely. That's another large car market. India is a large population, but it is an endless story of failure, of government failure. You want to talk about political risk? The governments in India, not just the national government, but the state level governments in India, it's just an endless series of failures. Their car market is tiny by comparison to Japan. I think even Indonesia might have a bigger car market than India. So I think there's value to be gained by doing something in Indonesia. I don't know about producing cars there. You have to recognize also the plan for Tesla's next gigafactories, the next generation gigafactories, is twice the output, half the footprint. Well, twice the output of Shanghai would be 4 million vehicles a year. 2 million vehicles a year. What car market can absorb 2 million vehicles a year? It sure as hell is in India. And it sure as hell is in Indonesia. It might be Japan. But the number of countries that can absorb that kind of output is very limited. Now, maybe there's going to be a smaller version, a much smaller version of that factory that will operate in places that can't sustain the volume. I think that you almost have to go there, or you have to put it somewhere that has free trade agreements with other places. Australia is another example. Great country, but smaller than Canada. So the car market, even though they're wealthy, the car market just isn't big enough. So I think we're going to see next-gen factories in Europe, probably not Germany, based on Tesla's experience with Germany so far. Probably in Texas, but maybe somewhere else in the United States. Probably at a Gen 3 factory in China because they need that for the Chinese market, and maybe Japan and South Korea.
You make some good points, Warren, but what I'll say is for the China thing, I agree with you. It could get hyperbolic with Biden, but that's the beauty of America, because I know, this is just me, 99.999%, they've done it before with the COVID, but I am more confident that they are not going to be able to confiscate a factory in the United States. Whereas in China, rule of law is a little bit less, let's say, robust. Where in America, that's why people love to invest in America. They love to invest in our companies. Foreigners love to invest in our companies because of our accounting rules, because of our free markets, because of our deep history of that. So I think that is why I don't worry as much. I think you should still worry. But when you say a real worry, I don't worry them coming into Austin and saying, we're going to tape this thing up, you're over. I worry, and I'm not saying that'll happen in China, but I'm more worried about it because if there's a conflict between America and China, I like China. I'm nothing against China. It's just you're going to have a political boom. And guess what? Tesla happens to be an American company. So they may get pointed out more than a Chinese company. So that's the risk. So I grant you with the Biden, and I grant you Europe has regulations, but basically they're free countries. And basically, as long as you do the right thing, you're going to remain open.
They're free countries. Okay.
Yeah. So, I mean, China, to me, I think that has to be the risk because, are you worried about Joe Biden? He's not going to be the president in a couple of years, most likely. Xi Jinping's president for life. If Elon Musk says something to Xi Jinping, Tesla in China is over. If Elon Musk gets on Twitter today and there's about 50 tweets about Biden, guess what? Tesla factory is going to operate without a problem. So that's the difference. Essentially, Elon could attack an American leader and I have no problem, but he never says anything about China, and I hope he never does, because guess what? You're going to have big problems.
But you're ignoring the antitrust risk in the United States. There's a massive threat of
that'll be a while, though. We're nowhere near there.
Well, if Ford and GM and Volkswagen and Toyota go bankrupt in 5 years, we're pretty close.
Yeah, but if that happens and Tesla executes the investment, it's already going to be an investment of a lifetime. Tesla, here's the problem. Even though Tesla's a big market cap at 600 billion, where Ford and GM is 100 billion, together at 6 times, here's the problem why Tesla won't face any problems in the car market, because the units and Americans, some of them are, they don't get it because lawmakers will say, hey, I understand Tesla's a big company. They got a huge market cap, but they'll say, but they're only doing 2 million vehicles this year. And these ones are doing 5, 6, 7 million. They won't put 2 and 2 together to say, we got to stop Tesla because they just won't do it because they're going to say, well, yeah, they're growing, but they're still half the size of this biggest company. So, or a quarter of it. So they're never going to get around to it. It's going to be 6, 7, 8 years in the future. And by then, Tesla would have been so dominant, it's not going to matter. Now, I do grant you, if they get the robo-taxi going and Tesla bots starting, then I believe you might get some regulation from lawmakers. But we're looking at easy 2030 before that's even an issue, in my humble opinion.
Herbert, how are we doing on time?
Okay, I think we can close it down a bit. I wanted to end with positive note. Hopefully, guys, don't get political with me. Come on, go to Warren's channel if you want politics.
But why bother living if you're not going to have a debate?
No, debates are great. The debate's great. Okay, but let's get positive about Investor Day. I just want to understand from you guys. You know, how excited are you? Do you think that Investor Day, compared to the other events that Tesla has ever done, is this a pivotal point for Tesla, or is it just going to be the next logical milestone for them to go? So I don't know, if you give me a rating of 1 to 10, 10 being the most incredible thing, and I might say it's an 11 for me, what would you guys say?
6.
Wow.
8.
Yeah.
I'm an 8 or 9. I actually think Q1 earnings, they need to ship significantly more than they did in Q4, where I think the questions will really start coming out. So I'm really looking ahead to Q1 P&D in earnings.
All right. Then it sounds like I'm the Uberist of all Uber bulls for this year. I get you. I'll let you have the most Uber bull for 7 years and onward. It's you, Warren. You've always been you. Love you. Thank you very much for joining us. Great show. Very intelligent conversation. I really appreciate it, guys.
Yeah.
Thank you so much.
It was fun, Warren. Thanks for engaging back and
Thank you,
forth
Warren.
with me.
Thanks, Herbert. Christian.
Bye, guys.
Bye-bye.
Peace.
See ya.